Okay, we're now looking at H. We did G and we're looking at share capital. So we're told that 75% of 900,000 shares was in issue. Straight away, we should probably calculate how many shares are in issue. So 75% times 900,000. And that's going to give you how many shares are actually in issue, okay? Not all our shares are in issue. So if we multiply that, we should get 630,000. That's the number of shares we have in issue. Is this right? Oh no, I did 70%, not 75. So sorry, everyone. 75% of 900,000 should be, sorry, I'm doing this without a calculator, should be, okay, there we go. Okay, that's the amount of shares in issue. And we know that there's a final dividend of 24 cents per share on the 28th of February 2017. So that was meant to be a circle, but I see it's a triangle. But okay, so at the year end, this means we owe our shareholders money, okay? And how much do we owe them? 24 cents per share. We've calculated how many shares are in issues. Because we owe this money to our shareholders, it's a liability, and it's a current liability because we need to pay them soon. So we know we calculated that 675,000 shares were in issue. We know we owe 24 cents per share, and that should give you a final amount of 162,000, I think. So that's our shareholders for dividends. That only took us 2 minutes, so I'm going to do the loan adjustment in the same video. That's all you have to do for the shareholders, okay? So moving on to loan. Oh guys, this is so important. There are so many things you need to do here and need to remember. Okay, so step one, you're going to obviously calculate your balance here, because this is the amount that's going to go into your loan under non-current liabilities. You also need to see if any amount, and here's 50,000, will be paid within 12 months. If you pay an amount within 12 months, so in the next financial year, then this amount is a current liability, okay? And you should know by now that we call that the current portion of loan. Okay, so let's go through this slowly. So we have the balance at the beginning of the year. So let's use this to calculate our loan under non-current liabilities. Loan, okay? And you can write the bank name. Cool. So at the beginning of the year, we had 376,000, okay? Whenever you have installments or interest, and I remember we spoke about this when we did the income statement too, we subtract those installments. Now, whenever we have interest capitalized, right here, we add it, okay? You always add your interest capitalized. That's what interest capitalized means, and I told you this in another video. But we are not done, guys. This is so important. We're not done. I know it looks like we're done, but we're not. Remember that this is non-current liabilities. And we said because we have a current portion of the loan that we're paying very soon, we said that this is not non-current. This is current. And that means we have to subtract it from our non-current loan, okay? We have to subtract it, and you should get a final of 282,000 Rand. We are not done with the loan. this amount, we said we're moving to current liabilities. So we need to go to current liabilities and we need to say, hey, we have a current portion of loan, and that is 50,000 Rand, okay? Okay, so I think that's all we have for our loan, but it's many, many steps. Please remember, you subtract your installments, you add your capitalization. If there is a current portion of loan, subtract it and then move it to current liabilities. Okay, I hope everything's clear. I hope you guys are keeping up, and we're almost done. Yay.